Market moves coming at you. We're going to be going over Aurora Cannabis today. We just had a new document released on sec.gov. We'll tell you what it means, how it can affect the company, and everything. Stay tuned. So please hit that subscribe button. During this channel right now, we are trying to find the best marijuana stock out there. If you're curious on the past videos where I dive into this, click the playlist at the top right hand corner. It'll educate you on what we've found so far and what can be of value to you. But first, I want to go to sec.gov, check out Aurora Cannabis because they released a certification 3 days ago. I'm a little late to the game. I was on vacation, but it's okay. I'm going to show you it right now. All you have to do is click this, and then you see they released this letter. Approval from the New York Stock Exchange to buy shares of their stock. This is huge. This is exactly what I wanted to see with Aurora Cannabis because this was the one thing that was setting me off from this company that did not look good for the company. But now they're doing something to fix it, and I love it. I'm more excited about this company now, and I'm going to tell you why, what this means for the investor, what this means for the company, what this means for you. We're going to get into what this news is really, what it breaks down to. So basically, New York Stock Exchange granted them permission to buy common shares. And what this means is this company can now buy their stock, and that makes the outstanding shares smaller, which is great because they've been using their shares to buy companies and to pay for things. So basically, they've been making many acquisitions with shares, and the shares went from 500,000 shares to 1 billion shares. So all that means in the long term is that the company is going to have a hard time increasing its value from a stock standpoint because with the more shares they have, it's going to increase their market cap faster. So their company is just going to be valued higher if they have more shares, and if they increase the price of those shares, the market cap increases faster. So if they reduce the shares, their market cap goes up slower when the price goes up. So that may sound crazy, but what I'm going to do now is just dive into the company overview I had a little bit a while ago and just tell you from this standpoint what it means. So basically, an overview from all the pot stocks is that Aurora Cannabis is the leader from a price to sales standpoint. It is priced within many of the big guys. So CGC and Tilray have the same price to sales valuation as Aurora. That's fine. That just means it's within its competition. If I go to market cap is also within its competition. It's $6 billion for ACB, and that puts it right between Tilray and CGC, which is fine. And then I go to shares outstanding. I see everything is in the millions. Aurora Cannabis is in the billions, and this is what I want to harp on right now. I want you to understand this, and this is what's going to help you understand the stock and how you can profit from it. So basically, ACB used a bunch of shares to make acquisitions. That's why they are in the billions. They use a lot of their shares to grow, and that's a great thing for the company because now their earnings can increase as well because they have more assets increasing their revenue and all that stuff. So they have more things helping out their company. And the other stocks on this list are in the millions. So that just means that they didn't use shares to make acquisitions. They didn't use shares to do a lot of things. Their shares have been slowly increasing, nothing dramatic. So Aurora Cannabis basically doubled their shares. All these other companies have been relatively strategic with how they're increasing them slowly. And all this means is that these shares here, 72, 340, 220, if the price goes up, the market cap only goes up by 220 million. So if I say Tilray goes up by $1, the market cap goes up by $93 million. So the market cap is how you value the company. If the market cap's too high, you need to show the earnings to reflect it. So if Tilray's earnings double, then the price will have to follow from a market cap standpoint. So increased earnings, so better earnings that come out, the price is going to follow and the market cap's going to increase. So basically, the higher the price goes depends on the outstanding shares. If there's a small number of shares, the market cap doesn't go up that much because all you do is you multiply the price times the outstanding shares. That's the market cap. So I just want to go on to the next slide. In the next slide, there's only 2 more. They're very great information, so stay tuned. This is going to help you figure out which pot stock is the best to invest in. Right now, we're just checking out why Aurora Cannabis is a better investment with the new news that came out. And basically, ACB has the largest growing capacity, and I think that's huge when you look at the metrics on all these companies, because if they can put more into the market, they can develop a brand faster, they can get to customers quicker, and then they could be the leaders and then sustain this for a long time. It's very circular. And then the next slide is just why I didn't like ACB a while back ago. This is only 2 weeks ago. These are the only 2 things I found, is that the shares that they had, they're too much. They have 1 billion shares outstanding, and basically that just means the price can't increase as quickly. And if you want to make money from an investment, you want to see the price that you bought it at, you want to see the price you sell it at be a lot higher. And it's not going to be higher if the shares outstanding are huge, like 1 billion. So the one thing I saw was that, and I didn't like that, and the fact that they're trying to buy back their shares with this letter is huge, because if they can reduce their 1 billion shares to 500 million, that would be a 50% drop. That would be great for the stock, because it would also drop the market cap. So let's say Aurora Cannabis has a market cap of $6 billion, which it does, and it has 1 billion shares outstanding. So that puts it at, let's say, a price of exactly $6. Are you following me? We have a market cap of 6 billion. We have shares outstanding of 1 billion. 6 divided by 1 is $6 a share. So let's say they buy back half their shares. So they only have 500 million shares. And now, if you divide 6 by 0.5, their price is going to be 12. So that doubles their price, or it lowers their market cap. So basically, buying back shares is very bullish, because it's going to drop the market cap, and it's going to help them in the long term be able to have higher price movements. Great things for this company. Pretty pumped on it. Sorry, my glasses are weird. This is the light reflecting, but yeah, ACB looking a little bit more bullish in my mind. Let me know in the comments what you think, if you agree or if you disagree. Market Move signing off. Peace. For more information on the Market Mover Indicator, free consultation talks, and courses, head to the website marketmovesmatt.com. Don't forget to hit that subscribe button and check out the latest and popular videos I have uploaded.